Welcome to the Prosperity Podcast.
Prosperity Thinkers, welcome to the podcast. We previously had been talking about taxes and the difference between W-2 and self-employed and things that we can do to have control over our capital and things that we can do to protect ourselves. No loopholes, it's following the tax code. We didn't cover two of the big categories. So Kim, take it away. What are those two pieces right now?
Well, the first is a business, and you can think about this in tiny forms like a sole proprietor, or which would be Schedule C, not the best, or an LLC, and potentially even upgrading into the corporation realm. And of course, LLCs can be taxed as S corps and C corps and such. And if you can generate 1099 income in any form, that is so valuable for your family, just for home office deductions and that kind of thing. But even going further, actually having a business. And my husband and I have had businesses for so long, I don't know what we would do if we didn't have them. So it's hard for me to even think in those terms sometimes. Yet I know that within a business, we get to earn income and pay expenses and then pay tax on what is left over. And so that is very valuable. And it's very black and white. And there are very clear, again, roadmap, like we talked about in our last time together, very clear roadmaps for how to do that within a business. Then I also want to address the real estate realm, because sometimes for people, especially that are W-2, that's the easier space to get into if a business doesn't fit them. So having investment real estate, just starting with something simple, another single family home, an Airbnb, that kind of thing, and then having a management company for it, et cetera, enables such good deductions. And I'm not going to get into detail. I'm not a CPA, but learn about things like bonus depreciation, which is back and available again, and all of the cost segregation things that you can do with real estate. So those two things in particular are worth learning about. And this is the best part. If you don't have investment real estate yet, and even if you do, learning can essentially happen for free. So get Tom Wheelwright's book, get on your favorite AI, get on YouTube if you prefer to learn via video, and learn about bonus depreciation and cost segregation. Both of those items should absolutely have help once you get to the point where you're actually utilizing them. You want to have a CPA that knows about this space and is doing the work with you. Nevertheless, the learning is free. And so if you feel like, oh, I have this already and I'm not taking advantage of it, dig into the learning. If you feel like I don't have it and I want to take advantage of it, dig into the learning. Because while you're creating the down payment money that you need or whatever it is, you can always work on the mindset, which learning and adding to our own capabilities mentally is a part of that, and so valuable and helpful. So again, on the business side, 1099 income. On the real estate side, bonus depreciation and cost segregation. And then I want to add one more, and that is for those accredited investors out there, the oil and gas space, or the energy space, it's sometimes talked about as. And it's a space to be very careful because there's a lot of easy ways to lose money in it. Nevertheless, it is one of the very valuable tax deductions that can happen legitimately, black and white, following a roadmap, because the government incentivizes us Americans to invest in that type of environment. Tom Wheelwright's actually got 7 investments that he talks about in one of his more recent books, and that's a big one. And Spencer, you may know some others, especially for accredited investors, that might be fun to chat about briefly.
Absolutely. There's a variety of things for accredited investors that we can do. It can get obscure. So I'll go into the obscure just because it's helpful. But like, for example, for the motion picture industry, there are tax credits that you can get there. There's tax credits that you can purchase from Native American tribes. There's tax credits that can be for growing trees because it's a tree that produces carbon offset, solar, etc. So there's a variety of things out there. You touched on something that was really interesting, and I want to circle back to it. which is this. So Tom will write, and we talked about in the previous episode, I remember one simple thing that he did that has stuck out in my head. Tom built a casita behind his house. Why did he do that, Kim?
So that he would have a separate building whereby he had a commute to go from house to office for his work, whether it was podcasting, video work, or just actual CPA strategy work that he does. And so that commute is very important. And again, if that's not something that you're familiar with and you want to learn a little bit about it, that makes some additional home office business deductions more valid and even more black and white and crystal clear to take and be completely legitimate about it.
Yeah, I love it. So that is a deduction that can happen. There's other things that we can do. And again, we're covering a lot of stuff in this episode. If you have specific questions, go to hello@prosperitythinkers.com. Now, regarding real estate, if you own a business, your business has to have an annual meeting. Well, you can go to a destination, or you can do something where maybe you want to get a further deduction. It's called the Augusta rule. So you can go and get a deduction by renting one of your properties to your corporation. We've talked about, owning Airbnbs or properties like that. Have you seen a lot of people that you've worked with, maybe their spouse gets a real estate license, so they become a professional to get that? Talk to us about that.
Yeah, that's interesting space. And actually, you can be a real estate professional without having the real estate license. As they work to refine that, maybe it's collapsed, but that is 750 hours, which is about 15 hours a week. So it's not a small amount of time. And it's important that you don't have a W-2, which is why you mentioned spouse. This is ideal for a stay-at-home parent to then do the specific real estate things that are necessary as a real estate professional in order to deduct real estate investment income against other earned income, like your spouse's W-2 income. Now, it is interesting because it also lets you get into the arena of deducting losses, which I always find kind of funny because, again, tax tail wagging the financial dog, we don't want to be taking on real estate investment property that is creating a loss. And yet a lot of people do, thinking that somehow that's going to benefit them from a tax standpoint. And maybe it does. Nevertheless, be conscious of that. And I want to add that sentence too to all the fun, super cool, unusual tax plays that you mentioned earlier, like the Augusta rule, like some of the other things around the solar and, the more unusual spaces, because those can be, again, very valuable, but they can really be tricky. And holy cow, have I seen a lot of money lost. And a 100% deduction is not what you're seeking. So make sure that your emergency opportunity fund are very solid. Make sure that if you choose to invest in those realms, that it truly is money that you can lose. Same with oil, right? It's literally a hole in the ground sometimes. And yet they're fun to talk about. They're super effective some of the time. And they can be very detrimental because not only are you losing money occasionally, it really affects people's psyche when money like that gets lost, and it's hard. And so I think sometimes I'm more than cautious because I have seen so much money lost in those special types of programs. It reminds me back in, I want to say, the 70s when all the golf pros were starting to make their millions. And they were doing LLCs at the time they were doing limited partnerships at the time that were the hottest tax play. And many of them have said afterwards, we would have been better paying our 90% tax bill because at least we would have kept 10%.
That's so true. That's so good. I think it's just as humans, what happens is we want to go for the awesome, sexy thing and the complex thing often because it looks cool. Like that's why some of us drive exotic cars. The Honda, the Toyota is what gets from point A to point B. So here's the piece that I think about often. We have the simple real estate that you've mentioned, owning an Airbnb. And while that, I think the large window of opportunity of that has closed for the most part. Not saying it's closed, but it's shrunk.
In many
we'll call it that.
cities.
Yeah. But there are opportunities. One, you mentioned at the beginning of the episode, like we have to get educated. We have to learn. And for W-2 people, it may be easier or better to invest in a REIT, like a real estate trust, or it may be better to be in something that's not as complex instead of taking on the entire rental property or an undervalued complex. Have you also noticed that some people tend to get in over their heads when they start to do this? And what's the kind of counsel you would give to say, hey, watch out?
Yes, it's a great question. So absolutely, I've seen people in over their heads. And I've also seen people working the deal the best that they could, and they're earning 4 or 5 or 6%, which to me is not worth the risk and the time. And so I would encourage people to find a deal that's double digits or don't do it, because it's frankly very safe and certain to earn 4 or 5% on money. You can do that at a bank. You can do that without tax in a life insurance company. And that is just writing a check and letting it happen. You don't have to do a thing. And in fact, if you do the life insurance, that's guaranteed to go up every year. And then dividends on top are what equal that 4 to 5% without tax. And though we have to say that dividends are not guaranteed to be paid, they've paid the dividends for well over 100 years. All of these mutual life insurance companies like Guardian, New York Life, Mass Mutual, Penn Mutual, Lafayette, probably some others I can't think of right now. So very simple to do that. Plus, once the dividend gets paid, it becomes part of the guaranteed cash value, guaranteed to go up again. So even though the dividend is not guaranteed to be paid, once it gets paid, it becomes part of that guaranteed cash value. And so it's just a very easy space, again, to earn the 4 or 5% without tax. And that's in today's realm, which there have been other years when it's higher than that. And so I just really caution people to go slow, start small, make sure you have an emergency fund, then make sure you have an opportunity fund, then do some pretty normal investments, an index fund or something simple in the real estate realm or business if you're headed that way, and then pursue some of these fancier things that we've talked about today.
Mm-hmm. Absolutely. What is the business entry? Like we've talked about real estate, what some of the entry points are. From your perspective, what are some of the business entry points if we're talking W-2 or let's say someone in their late teens or 20s?
Yeah. Well, for sure, you can do a very simple Schedule C, sole proprietor, get some 1099 income, and prove the concept. Fairly quickly, you're going to want to upgrade your legal entity to an LLC, a limited liability company. So again, if you're not familiar with that, go do some learning. Then, if you have the capacity to purchase a business and it fits your Kolbe profile, KOLBE, if you're not familiar with that, then a franchise is a really good way to go. However, if it does not fit your Kolbe profile, please don't purchase a franchise. You will be miserable. For example, Kim, probably Spencer, should never purchase franchises because we don't want somebody else telling us how to run things. And yet, that's a very valuable aspect of franchising. So those are the first steps that I would take. And then something else that I heard recently, which I think is so helpful, and that is if you want to pursue a business, I've got a client doing this right now with some fairly large dollar figures. He wants to buy $250,000, $1 million type business in that space. Make sure you follow your talents. So a lot of people will say, follow your passion. And that's great. That's certainly one perspective. But if you follow your talents, you know that you will enjoy the very hard work that is necessary for a business. Passion is kind of a come and go thing, and it can shift. Talents, God-given, installed the day that you were born, going to be there the day that you die. This is why I like the Kolbe analysis around talents. It's so helpful, gives us English language to describe them. And if we follow our talents, technically, we'll never work a day in our lives if you view work as a 4-letter word, which I don't personally, but I know a lot of people do. So that is my perspective on the purchase of business. And to finish out the story real quick, my client that's looking in that larger space looked seriously, heavily. He had consultants helping him. And in the end, he decided to stay with his quite high-paying W-2 job because it did fit his talents. And frankly, darn was it easy when you compare it to owning a business. So for everybody.
That's true. I think a lot of people, they get infatuated with the idea of owning a business. And what they end up doing is they start owning another job.
Yeah.
And you've seen this as you've sat across the screen or the table from meeting with people for decades and decades. You've been able to help guide based on principles, not based on where the wind is pushing at the moment. And that is something that's really cool. You have those relationships with Tom. You have the relationships that you've built and been able to see what is going to work, not just for today, but for decades in the future. So, Kim, amazing wisdom today. Really appreciate it. For any of you listeners, what Kim is saying is get educated as much as possible. And the podcast, if you're subscribed, is one of those tools. The library of books that you've written is amazing. And then if you have a specific question, hello@prosperitythinkers.com. Thanks, Kim.
Thank you for listening to the Prosperity Podcast. To take control of your money and have it work for you, visit prosperitythinkers.com.